Welcome to Illuminati Silver. We tell you the truth about silver. Today is Thursday the 5th of March 2020. And yesterday we published what we believe to have been a most important video entitled Equities Recover and Gold and Silver Calm. Just before the storm, and on Tuesday's surprise Fed rate cut pushes gold and silver prices higher. Now, today we're producing two videos. This one, which is being released around midday or just after GMT, is more of a general video for those who are perhaps new or have perhaps only a basic understanding of stock markets and how, when they fall, this may affect them. Then later today we shall publish our promised daily update on what the markets have been doing, especially bearing in mind the considerable economic data being published today and particularly then tomorrow by the United States. So let's talk briefly about equity markets. Now, many of our listeners, to some degree, are perhaps secretly happy, if we were really to admit it, when they see stock markets fall, because generally it means that those investment monies tend to move towards safe haven assets such as gold and silver. Now, under most circumstances, that tends to be the case, except that investment markets now offer so much choice that it doesn't always happen that way. We would all love our gold and silver prices to go through the roof so we can capitalize on what we have spent our hard-earned money on over the years, accruing either small, medium, or large quantities in some cases of precious metals. However, we saw earlier in the decade cryptocurrencies gradually attract those monies which normally would come our way, thereby limiting any increases. We also saw last Friday that despite significant equity falls, the gold and silver price also fell, as investors sold their gold and silver, but mainly gold, to cover their losses and meeting margin calls. We also see the likes of Warren Buffett, rather than plough his billions into gold and silver, actually hold cash, so that he has the resources necessary to plough back into the equity markets once they have fallen. Of course, he'd have those resources if he invested in gold, but liquidity is key. Any seasoned investor will tell you that the best time to buy equities is immediately after a crash, unless of course they're just a day trader who is no more really than a gambler. Now, in addition, bonds too, both corporate and government, have been portholes for surplus funds to be invested in, either historically because of high yields, or certainly more latterly because falling yields lead to capital gains on bond prices. In other words, the underlying bond price goes up. So if you already hold it, you can sell it at a profit. So we have to accept the harsh reality that gold and silver have competitors, not to mention the other precious metals which could also have an impact. Now, coming back to the stock market, and especially when it falls, there are other aspects of this to which any investor should be aware. We're now firstly going to read an article published by the BBC just under a week ago on this very subject. Now, it may prove basic for some, but it is also a great reminder to those of us who sometimes cheer the fall in share price to bear in mind that there are other implications. Now, this article is mainly referring to the United Kingdom investment fraternity and using UK terms, but it does more or less apply equally elsewhere. So here it goes. Let's listen to that article. BBC News article dated 28th of February 2020 by Kevin Peachy, personal finance reporter. Heading: Why should I care if share prices fall? Big shifts in the stock market are often in the news, whether they are booms in the United States or falls due to the coronavirus or the financial crisis. As companies grow, they issue shares. The largest companies in the United Kingdom have shares which are bought and sold on the London Stock Exchange. Their collective performance is often quoted amid a blizzard of numbers that may feel confusing and irrelevant. Rarely does anyone mention during a coffee with friends that the FTSE 100 has dropped well below 7,000 points. But there are good reasons why this performance affects your life and finances. I don't invest. Actually, you probably do. Many people's initial reaction to the markets is that they're not directly affected because they do not invest money. Yet there are millions of people with a pension, either private or through work, who will see their savings in what is known as a defined contribution pension invested by pension schemes. The value of their savings pot is influenced by the performance of these investments. Pension savers mostly let experts choose where to invest this money to help it grow. Widespread falls in share prices are likely to be bad news for pension savers. As much as £600 billion is held in defined contribution pensions at the moment. This is what has happened in the last year to the FTSE 100, pronounced FTSE, which monitors the performance of the top 100 companies listed on the London Stock Exchange. And as you can see on this graph, back in March 2019, the index was 7,196, and then peaking here at over 7,686. I'm not sure that's the peak. I thought it was slightly bit higher. The graph isn't responding. And then in the last month, the collapse well below 7,000. In fact, on the 28th of Feb to 6,580. And currently it's 6,815 as of that date anyway. So big rises or falls can affect your pension. But the advice is to remember that pension savings, like any investments, are usually a long-term bet. Quote, "There's a huge difference between knowing you're connected to the stock market and panicking about it," unquote, says Sarah Coles from the investment platform Hargreaves Lansdown. Quote, "Stock markets always go up and down over the short term, and while we're seeing particularly large movements right now, it's important to bear in mind that investors have lived through major ups and downs in the past and come out the other side," unquote. Now, does everyone have a pension like this? Well, no. Some people have a pension which promises a specific value, depending on their salary, and others have no pension at all. About 10 million people have been automatically enrolled into a pension and may not have really noticed. This scheme sees employers divert wages into a pension and contribute some money themselves. The government adds a little in tax relief. In every case, the value of these pension savings is affected by investment performance, so the markets matter. Maybe not as much as everyday wages, but for future pensions. So what about people retiring or retired? Well, timing is more critical for those at retirement age, as this may be when a retiree uses their pension pot to buy a retirement income or annuity. The bigger the pot, the more income they will get in retirement. Anyone who has a pension pot invested and is taking an income from it will again see their investment go up and down with the stock markets. That could mean getting less than you expected if you cash in too much after stock markets have fallen, making it important to plan how to make up any of this shortfall, experts say. Now, if I'm still in work, can my job be affected? Well, dozens of big companies have warned, for example, that the coronavirus will hit their share price. Trouble over an extended period could have an effect on the amount of work available, says Moira O'Neill from Interactive Investor. Quote, "Stock market falls also affect business confidence and the ability of companies to raise money," unquote, she says. Quote, "So if this short-term blip becomes something more pronounced, there could be an impact for the wider economy and maybe your job, unquote. We'll mention this a little bit later. Do changes affect my mortgage? Well, there is no direct link between the stock market and your mortgage or rent. However, if panic on the stock market spreads to the wider economy, one reaction might be to cut interest rates. This is the decision of a committee in the Bank of England or of other central banks around the world. Obviously, we're talking about the Fed's FOMC in the United States, for example. Interest rates in the United Kingdom have been low for some time. A further cut could still make variable or new fixed-rate mortgages cheaper, well, either yours or your landlord's, but also means cash savers will probably get less return on cash savings. Conversely, if the economy and the cost of living are considered to be growing too fast, the bank would think about raising rates. So please do not borrow too much. Are stock market falls always bad? It can be hard to find positives when people's jobs are affected, or, as in the case of the coronavirus, stock market performance has been affected because lives are being lost. Yet in purely investment terms, lower share prices can offer an opportunity to buy in the hope that over the long term they recover and rise. Many people will do this initially through a stocks and shares individual savings account. This is called an ISA in the United Kingdom. Now, Ms. O'Neill points out that anyone tempted to do so must consider how prepared they are for their investment to keep falling and make sure they do not put all their money into one type of investment. Some people invest money in what are known as tracker funds. These go up and down in line with the performance of a certain index, such as the FTSE 100. So if the index falls, so does the value of their investments and vice versa. One advantage of these funds is that they often cost relatively little to sign up. Well, what about my holiday money? Well, among the markets that hit the news reports are the currency markets. In other words, the value of various currencies compared to each other. That affects the exchange rates you get when you change holiday money. This can be affected by a range of factors, some of which are different to the issues affecting companies' share prices. End of article. Now, in addition to what has already been mentioned, there are other perhaps more detailed implications which falling equity prices have, such as, for example, equity collateral that some companies may have to put up for borrowed funds, only to find that the lender asks that company for additional funds to make up the security value, should share prices fall, and a host of other interrelationships with funds and derivatives, too complex to go into here. However, we can see today, for example, that Britain's biggest regional airline, Flybe, has cancelled all flights as it has gone into administration, with the virus outbreak causing passenger numbers to collapse. The airline was already in financial difficulty, and a number of other businesses across the country and the world will be suffering similar fates. This fear factor of businesses failing then leads to investors selling their shares, causing prices to fall, and then the knock-on effects all this has on those companies, as we've already discussed. Now, we remember when we decided to commute our pensions, we could receive a 25% in the United Kingdom lump sum tax-free. Can you imagine having to make that decision either a day before stock market crash and then having to make it a day after? If you have a pension pot of, let's say £1 million, which would be typical of a mid-ranking executive with 30 to 40 years working service, the day before crash, he would receive, or she would receive, £250,000 tax-free, 25%. But if there's a fall in the market of, say, 10% overnight, and then they have to take their lump sum the next day, they now receive £225,000 potentially. That's assuming, of course, all of the funds were invested in equities, which wouldn't always be the case. But that's a loss of £25,000 for just one day. Now just imagine the effect if over, say, a week's period, there's a fall of 20 or 30%. Then you're looking at another £25,000 or £50,000 loss, just through the accident of timing. Not to mention, of course, then the value of what that pension is worth, which is then reinvested into some other vehicle to provide your monthly income. Anyway, that's enough for now. So if you are one of those hoping for an equity collapse in order to bulk up your precious metal portfolio value, also can take into account how it may affect your pension or the other aspects mentioned earlier, before you cheer too loudly. Now that said, of course, yesterday the Dow did in fact regain some 1,173 points, and the S&P was up 126, with Asian markets up overnight between 1 to 2%, but European markets seem to be down at the moment between 1 and 2%. But we shall cover most of this in our roundup later this evening. Thank you so much for listening. If you haven't already done so, please do subscribe to our channel and press the bell sign so that you're notified of our videos as and when they're published. Not forgetting to visit our Richard and Greg channel, links to which we've placed in the description box below. We sincerely hope you found this useful. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.